Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Chip deal. Asian stocks edging towards a record following a tech-driven rally that pushed Wall Street to its 28th record high of the year. Gains driven by Nvidia's $100 billion investment plan for OpenAI. Fed Chair Jay Powell is set to speak later today after the central bank's new governor, Stephen Miron, makes his case for more aggressive rate cuts. And recognition of an independent Palestine is on the rise, but Israel is vowing there will be no Palestinian state. It's just gone 8 a.m. across the Emirates. I'm Johanna Bersace in Dubai. Well, you just heard it, another record high for the S&P this year. It's at 28th, I believe, in a row. So it is really record after record. It feels more than 28, if I'm honest. But there we have it yesterday. Nvidia, obviously in focus as well, that up to $100 billion investment in OpenAI, catching a lot of attention overnight. We are going to discuss that on the show, but propelling Nvidia also to all-time record highs. So that is the picture out of the U.S. S&P futures trading sideways this morning. We've got the handover from Asia Pacific, a bit of a mixed bag there. You had a pull down on the Hang Seng, obviously a lot of focus in Hong Kong about the typhoon that's about to hit. So some concern there. The Nikkei, though, continuing its back-to-back positive performance, trading up 1% today. And then obviously you're seeing a positive reaction, some of the chip makers in Asia as well, on back of the Nvidia news. The USD trading sideways today, though our colleague Dan Curtis was pointing out that this is, listen to this, the worst 9 months of the year ever for the Bloomberg U.S. dollar index. And we've been tracking it since 1997. So that just tells you how difficult a year it has been for the greenback. Even though most recently the trend has been for the dollar to trade sideways, we are substantially weaker on the year of losses, more than 10% for the dollar. And then gold continues to rise. We are close to 3,750 all-time record highs. Let's flip over because something else I want to point out to you. You know, people talk about putting money into safe havens, and there's been a lot of money going into alternative currencies away from the USD. Obviously, cryptocurrencies have been in focus as well with the attention given to it by the Trump administration. But what happened yesterday is we saw a huge amount of selling go on in Bitcoin, other cryptocurrencies as well. And you can see from this chart here that that Bitcoin to gold ratio, and this is one of the charts put forward by our colleague Anthony Stevens, is now sitting at what could be interpreted as a key level, i.e. around 30 times, a ratio of about 30 times of where gold is trading. And now what's happening is people seem to be favoring owning gold over owning Bitcoin. So perhaps gold is the new gold. So something to think about as we price in further rate cuts out of the Fed and money continues to pour out of the USD. Back to our top tech story of the day. Nvidia will invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. Let's unpack the deal and its implications for global markets with Bloomberg Intelligence senior analyst Robert Lee. Robert, so just tell us about the deal. It is, I guess, a pledge to invest up to $100 billion. What do we know about it?
Yes, that's right. So under this plan, and the full details haven't been disclosed at this point, but as of the second half of next year, there's going to be a phased rollout in terms of data center capacity of up to 100 gigawatts of power. So just to put that in some context, that's around 50 times larger than the power output of the Hoover Dam in America. So this is a ginormous amount of computing power, and it will be consuming an enormous amount of electricity. So under the plan, the framework agreement, Nvidia will be funding 10% at a time in line with the rollout of the underlying data center arrangement. So Nvidia, under the plan, would invest up to $10 billion over the life of this plan, depending on how quickly the rollout goes.
Yeah, and stay with us because I also want to ask you about further details that we've got about the TikTok framework deal that was agreed between U.S. and China. What do we understand is the latest vis-a-vis the licensing of the algorithm?
Okay, so just briefly take a step back from the headlines. What the U.S. is trying to achieve is obviously complete separation to maintain data integrity. And also to ensure that there is no leakage of any consumer data, outside the US to China or elsewhere. So that's really what's sort of underpinning what they're trying to do at the moment. And then also they are trying to ensure that they have full control of this algorithm. So under the agreement, as we understand it at the moment, although still the full details have not been disclosed, the algorithm would be licensed in by the owner ByteDance. A separate US entity will be put together with 6 of the 7 board seats filled by US citizens. And the Oracle, and this is the story that's come out today, that data would be hosted on Oracle servers. Oracle would be responsible for vetting the algorithm to make sure it's secure and that there's no leakage. And basically, if you like, Oracle would be managing the tech side of things. But I think, again, taking a step back, this is an ongoing saga, as many people are aware. Progress appears to be made. It's clearly going to push into next year at this rate. And separating the two businesses is an immense task. This is a story we'll no doubt be talking about in another 3 months or another 6 months' time.
Yeah, it's not going to be wrapped up in a matter of weeks. Bloomberg Intelligence's Robert Lee, thank you so much. Well, AI euphoria remains the main narrative for markets today. Asian stocks are hovering near record high as the tech rally continues on Wall Street. The S&P, as we spoke about, closing at its 28th record of the year. Meanwhile, we heard from the Fed's newest policymaker, Stephen Myron, who made an outlier's argument for cutting rates.
The upshot is that monetary policy is well into restrictive territory. Leaving short-term interest rates roughly 2 percentage points too tight risks unnecessary layoffs and higher unemployment.
Let's get out to Ayesha Tariq, Macrovisor CEO. Ayesha, always good to talk to you. I'm going to ask you the same question I asked one of our guests on the show yesterday. Hopefully you were watching, but I thought it was a really interesting statistic put out by Goldman Sachs, suggesting that when the Fed start cutting interest rates in an environment where the U.S. is not in a recession, the S&P tends to rally 14% in the next 12 months. Do you see the S&P rallying another 14% in the next 12 months, or are we going to start petering out?
Hi, Jumana. Good to be back on the show. So, look, I've learned to never say never, right? And especially with this market. I mean, what we've seen over the last couple of years has been phenomenal. And even since April, I would say, the rally from the bottom has been, again, phenomenal. So 14% isn't a stretch here. It depends on, the length of time in which it reaches 14%. But yes, we are still very bullish on stocks. The other thing that I would say is that we would like to see a little bit of broadening in the market. And that's sort of what we've started to see with small caps starting to rally.
Do you think the rally in small caps has legs? Obviously, small caps tend to be quite dependent and have a high beta to what happens with the interest rates. If the Fed don't end up delivering on all of the rate cuts that are priced in for 2026, does not act as some sort of a headwind for the small cap sector?
So the issue is the Fed is back on the path to easing, right? So we have 2 more cuts scheduled in for this year. It may or may not happen. Still on.
Okay, we seem to be having some technical difficulties with Ayesha. Ayesha, we're having a little bit of difficulties hearing you. If you want to repeat that point for us vis-a-vis small caps.
Sure. So what I was saying is the Fed is already on this path to easing. So whether we have 2 cuts in 2025 or 2 in 2026, that's not the point. The point is we are getting easier financial conditions, right? And when you add in the enormous earnings growth that small caps are seeing, coupled with easier fiscal policies, tax cuts, tax breaks, I think small caps can really shine here.
Okay, that's interesting. When you're looking at investing in U.S. assets, are you hedging out your dollar exposure, as we hear about more and more clients looking to do and investors looking to do?
So to a certain extent, yes. And this is because we do think that the U.S. dollar still sees some more weakness into the end of the year. Given, again, the Fed easing, cutting rates, we think that the current conditions of a weaker dollar is set to continue until the end of the year.
Yeah. How are you thinking about U.S. opportunities versus opportunities around the rest of the world? Most recently, obviously, we've been taking note of the massive run-up in Chinese equities. Are you seeing opportunities in the rest of the world?
That's a great question. Yes, we do, actually. So first of all, let me address China a little bit. So China, we are seeing an economic slowdown to a certain extent over there. However, the Chinese AI and tech companies have started to do very well. They do have the government support now. They have large capacity for electricity. And most importantly, they are starting to produce chips now that may rival Nvidia. So that fosters a good environment for Chinese AI equities.
And can that rising tide out of China lift all boats in the region? I mean, is it just specifically China onshore, offshore that you want to get exposure to? Or are there undervalued opportunities around that exist in the region that will also do well in an environment where at least the Chinese tech sector is outperforming?
So I think in terms of emerging markets, there's a good opportunity over there. So first of all, yes, tariffs have settled higher than expected in the end. However, with the weaker dollar, with lower oil prices, and the general central bank easing from most of these emerging markets has again created an opportunity in emerging market bonds, certain industrial equities, exporters, and as well as the currency, so foreign exchange opportunities.
Ayesha, always good to talk to you. Thank you so much. Ayesha Tariq, Macrovisor CEO. Now for a look at some of the other stories we're following. Super Typhoon Regasa has lashed the Philippines and Taiwan as it heads towards southern China. The storm is packing maximum sustained winds of 230 kilometers per hour. Hong Kong is set to issue its third highest storm warning at 2:20 p.m. local time. That is expected to go higher as the typhoon heads closer into Wednesday. Regasa looks set to be the strongest storm to hit the city in at least 7 years as residents brace for potentially widespread damage and disruption. President Trump says his administration is linking the active ingredient in Tylenol to autism and urging pregnant women not to take it. Shares of the products maker Kenvue reversed some losses after the bell, after slumping to a record low. The company says independent sound science shows taking acetaminophen does not cause autism.
So taking Tylenol is not good. Or I'll say it, it's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary.
And the White House says doctors may be exempt from a new $100,000 H-1B visa fee. The administration confirmed that the Homeland Security Secretary can waive the cost if hiring foreign doctors is deemed to be in the national interest. Hospitals warn the fee could worsen shortages in rural America, where international physicians are often critical. Disney says the Jimmy Kimmel Live program will return on Tuesday, ending a suspension imposed over his remarks about the murder of conservative activist Charlie Kirk. The company says it reached the decision after having, quote, thoughtful conversations with the host. Sources say Kimmel will address the controversy over his Kirk comments when he returns to the stage. And coming up, France becomes the latest country to join a growing list of nations recognizing Palestine as an independent state. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. France has now recognized Palestine as an independent state and, along with Saudi Arabia, called on Israel to end the war in Gaza immediately. This comes after the UK, Canada, Australia and Portugal formally recognized Palestine, joining almost 150 nations that have already made the move. Joining us now is Abir Abu Amar, Bloomberg's UAE Deputy Bureau Chief. Abir, another historic day at the UN General Assembly yesterday. What were some of the main takeaways from President Macron's speech?
Right. So, Joanna, this was part of this joint conference between France and Saudi Arabia. Now, Crown Prince Mohammed bin Salman did not join, but Faisal bin Farhan, the foreign minister of Saudi Arabia, took out remarks on his behalf that mimicked France. Now, what President Macron said is the cycle of war needs to end. The devastation in Gaza, the almost 2-year war in Gaza needs to end, and that Palestinians and Israelis live in solitude, in twin solitude, essentially. Essentially, what we know from President Macron's speech is France has become the latest major country, after the countries that you've mentioned, to recognize the state of Palestine. We know that he said there could be potentially, a prospect for Paris to open a Palestinian embassy, given two conditions, given the return of all hostages, of course, and the end of war in Gaza. Now, these remarks were confronted with criticism from both the U.S. and Israel. We know that Benjamin Netanyahu came out and said that there will be no Palestinian state on the ground, and effectively, how much does this really change things for Palestinians people in Gaza?
So there was quite a notable moment yesterday at the UN General Assembly when actually the French president went to physically embrace Riyad Mansour, who is the Palestinian representative to the UN. So a very pictorially strong moment, symbolic moment. But again, these are the conversations that we've been having the last couple of days. How much of the state recognition is symbolic versus actually being able to wield influence on the ground and influence the trajectory of this war and actually keep the prospects of a two-state solution alive?
Absolutely. I mean, I think you captured it with the word symbolic, right? This is what we've been hearing from a lot of the analysts, including our own Bloomberg geoeconomics team, which says that the move is symbolic. It's probably not going to have a major impact on in the short term, but it could add this consequential pressure on Israel to end the war in Gaza. And this is definitely what all the countries that have recognized Palestine so far have been calling for, the end of this devastating war that has killed tens of thousands of people in Gaza. And again, what our geoeconomics team says is that this allows, the recognition of Palestine allows Palestinians the right of self-determination under international laws. And this is an important step. Some of the economics side of things is that the EU, which is Israel's largest trading partner, could be adding some suspensions to preferential commerce agreements. But Germany has come out and said that it's not going to agree to that. It's opposed that decision. And we know that Germany and Japan are the two states that have not recognized the state of Palestine so far.
And certainly as members within the Israeli government on the right have been calling for one step further and the annexation of West Bank. So you've got to see how the West responds to that. Abir, thank you so much. Abir Abu Hamad, Bloomberg's UAE Deputy Bureau Chief. The Polish Prime Minister Donald Tusk says his country is prepared to shoot down any unauthorized foreign aircraft that enter its territory. The warning follows a series of Russian incursions into NATO airspace earlier this month. And in response, Poland and Estonia have invoked Article 4 of the NATO treaty, which can open a path to coordinated action amongst allies. And coming up, the Democratic Republic of Congo, the world's biggest exporter of cobalt, ends its ban on exports. We'll find out why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Democratic Republic of Congo is ending its months-long ban on cobalt exports. From October, the world's biggest exporter will now manage global supply by implementing a system of export quotas for miners. For more on this, let's talk to Bloomberg's Andir Ganga. Andir, take us back. Why was there a ban to begin with? Just give us some context.
Good morning, Jumana. So there was definitely a glut in the market, particularly when it comes to cobalt supply. You take a look at CMOC China, which is the largest miner and producer in the country. They ramped up production in two of their largest mines, and as a result, output increased by over 40%. What happened in the market is prices began slumping downward. It went to $10 per pound, and this is the lowest level it has ever hit in 21 years, save for a slight glitch in 2015. And as a result, the government had to step in and say this cannot continue because it's coming at our expense. And so the government in February stepped in, it placed a total ban on cobalt exports. And then in June, it extended that ban. And since then, we have seen prices begin to rebound 60%. And for cobalt hydroxide, which is the main export from Congo, prices have increased by 2.5%. And what we've seen unfold in this last couple of months is a tiff between the Congolese government and China's CMOC, because on one hand, the Chinese company wants to produce as much as possible. There's this insatiable appetite for African minerals to satisfy the demand back home in China. And then you have the Congolese government that is saying when most of these products are hitting the market, particularly when there's no regulation, then prices slump. And as a result, this ends up affecting the economy. When President Felix Tshisekedi was speaking at the sidelines of the UNGA in New York, he says that it's really important for Congo to be able to control prices, because then it affects the economy. If their returns are good, they have enough money in their budget to go into social spending and development. But if prices are on the low, then it's just the miners that are benefiting from economies of scale. So that's why we are seeing that new decision by the Democratic Republic of Congo. And as a result, they've introduced a new quota. They're saying that the need for the ban is over, but they still need to be able to control what happens with their minerals. So 45% moving forward, 18,000 tons for the rest of the year. And in 2026 and 2027, we'll see only 96,000 tons from 220,000 tons in 2024.
Zero, if they are controlling so much the quantity of exports that the DRC can actually export, if the quotas are so tight, are they going to have broader ramifications for the cobalt industry?
Absolutely. Some analysts fear that this could speed up the development and use of alternative metals that are not necessarily cobalt in the EV industry. But in the interim and in the meantime, until that happens, cobalt remains king, and DRC controls 70% of global supply. They're also in conversation with Indonesia, who control 10% of global supply. So you have two of the biggest players, 80%, saying that they want to see prices in the international market improve. And analysts predict that prices could go between $20 to $25 per pound in 2026 and 2027. And this is going to be extremely good news for DRC. Also, to ensure that they have some power and control, they'll be allocating 10% to their regulator to ensure that they can control not only global supply, but prices amid disruptions and geopolitical tension. And while there's this fear that it could disrupt the EV industry, DRC says they want to see that sweet point between sustainability and also profits.
Bloomberg's Indira Ganga, excellent reporting. Thank you so much. Well, coming up, recognition of an independent Palestinian state is on the rise, but will this alone help bring peace to the region? We speak to Yezid Sayigh, a senior fellow at the Carnegie Middle East Center. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Chip deal. Asian stocks edging towards a record following a tech-driven rally that pushed Wall Street to its 28th record high of the year. Gains driven by Nvidia's $100 billion investment plan for OpenAI. Fed Chair Jerome Powell is set to speak later today after the central bank's new governor, Stephen Miron, makes his case for more aggressive rate cuts. And recognition of an independent Palestine is on the rise, but Israel is vowing there will be no Palestinian state. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersacci, in Dubai, another record high for the S&P, close to record highs for the Asian indices as well. Japan is closed today. This is your picture. S&P futures trading sideways, well, basically down 6 basis points, but pulling back from the 28th record high of the year. A lot of focus on Nvidia, as we were speaking about earlier. That stock also accelerating up 4%, reaching a record high. They announced that they were investing up to $100 billion in OpenAI. So more and more deals going on, and that has lifted a lot of the chip makers. TSMC also in Taiwan up 4% today in trading on back of that news. So that is the main tech story this morning. U.S. dollar also trading sideways, slightly more positive, up 6 basis points. I flagged this earlier in the year, but our Bloomberg U.S. dollar index has actually had the worst 9 months of the year since we started tracking it in 1997. So that's a data point to bear in mind. It's been quite a challenging year for the greenback. And then gold just pulling back from all-time record highs, 3,744 is where we're at, about 4 basis points weaker. Flip the chart, because here I just want to show you that ratio between Bitcoin and gold. And for a while, we've been talking about investors looking for alternative currencies to put their money in. So went into gold, silver, Bitcoin, cryptocurrencies. Yesterday, we saw a lot of selling go through in the crypto space. About $1 billion of liquidations went through. And this just shows you that that ratio between Bitcoin to gold is sitting at key levels. This is a chart flagged by our colleague Anthony Stevens, and perhaps suggests that what's back is gold. So gold is the new gold. Maybe some money is moving away from cryptocurrencies. So keep that in mind if you are invested in the space. Now let's switch to geopolitics. As the war in Gaza rages on, France has now recognized Palestinian statehood at the start of a high-profile meeting of the United Nations. The effort aims to galvanize support for a two-state solution in a bid to bring peace to the Middle East. But Israel, backed by the U.S., remains defiant, with Prime Minister Benjamin Netanyahu vowing that there will be no Palestinian state. Joining us now is Yezid Sayigh, a senior fellow at the Malcolm Kerr Carnegie Middle East Center. Good morning to you. So you had multiple G7 nations, Western nations, over the course of the last couple of days move to recognize Palestinian statehood. They framed it as an act or that the fact that Palestinians deserve the right to self-determination, but also that they want to keep the prospects of a two-state solution alive. Does this actually serve the purpose of keeping the two-state solution alive?
Well, recognition of a state of Palestine so far is purely symbolic. I think it is a positive step insofar as it reveals political intention to get active on the issue. Now, there is a very high risk, which is that these same governments have for 25 or more years failed to take action that would have preempted the kind of situation we're in today. It would have preempted the desperation among Palestinians who lost hope that there was a peace process on the horizon, or that there was statehood on the horizon, and therefore allowed Hamas to rise. It encouraged the far right in Israel to rise and push for more colonization of occupied Palestinian territories. And so what we see today is that these Western governments and the rest of the international community are paying a price, mostly paid by Palestinians and by Israelis, for a quarter of a century of inaction. Now, that said, I think that the recognition this way does open the door for further concrete steps which must follow.
So you say, a quarter of a century of inaction. Actually, the first nation around the world to recognize the Palestinian state was Algeria. And back then, Yasser Arafat declared the formation of a Palestinian state. That was in 1988, 37 years. It's take these European nations, G7 nations, 37 years to recognize a Palestinian state. Critics will say that it's too late to actually influence the outcome.
I agree. I think it is too late in the sense that I don't actually see a two-state solution on the horizon, even if that remains the only feasible way of achieving peace and security between the two peoples. But in my view, the window on a two-state solution closed a quarter of a century ago with the failure of the Oslo Accords. The reason I refer to 25 years is that many of these very same nations, France, Portugal, others, the United Kingdom, collectively agreed in the Berlin Council statement of March 1999, that was the European Council of Foreign Ministers representing the entire EU as it was at that time, collectively concluded that the Palestinians had the right to self-determination in the form of a state, that this was an inherent right that was not subject to anyone's veto, and that they hoped that this would come from a negotiated solution, but that this was something that they expected to happen within a year, i.e. by around the year 2000, and that if this did not happen, they would consider other approaches. In other words, they might move to recognition earlier. So the Europeans have been sitting on their hands for 25 years. George W. Bush, interestingly, is the first world leader to endorse Palestinian statehood in the form of a statement from the United Nations Security Council in 2001. So there has been a lot of verbal commitment to Palestinian statehood by these leading world powers following Russia, China, and, as you mentioned, states and many others in recognizing Palestine way back.
Yeah.
The issue is that these powerful states then failed to do anything to keep a level playing field between Israel and the Palestinians, or to prevent further colonization of occupied territories in the meantime.
So the response came very quickly from Israel and from the United States as well. Even, the United States, as one of their senior diplomats, Morgan Ortagus, called this a publicity stunt. Secretary of State Marco Rubio said the decision to grant Palestinians or recognize Palestinian statehood is reckless. And I just wonder whether there could actually be an inadvertent reaction from Israel once Netanyahu is back. He says that the response will come. Could this actually lead to them intensifying some of their military operations, not just within Gaza, but on the West Bank as well?
I think that's something of a loaded question. I understand it's a sincere one, but let's take this apart. Is there anything that this Israeli government of the far right might do next that it hasn't already been doing for years, and certainly for the last 2 years? In Gaza, we have the systematic, methodical destruction of all habitation and economic facilities and so on in the entire Gaza Strip, the use of famine as a weapon of war, state-backed settler violence in the West Bank, open calls and plans for annexing the West Bank. So it's sort of hard to see where the threat lies. Let's flip all this around. I mean, there's been this slogan coming from Israeli Prime Minister Benjamin Netanyahu, various American officials, that recognition of the state of Palestine rewards Hamas. Maybe we should look at this as not recognizing the state of Palestine would be a reward for this Israeli government for everything it has done over the past 2 years, including, frankly, genocidal rhetoric coming from senior government ministers calling Palestinians human animals, vermin, cockroaches, and so on, and the kind of military tactics that, according to the latest data coming out of Israel, prove that 83% of the 65,000 or so dead, 83% are civilians. So the claim that this was, precise or surgical, etc., falls by the road once again. So really, the challenge, I think, is for this Israeli government, for other forces within Israel, and for American politicians to show us what action they will take to prevent this kind of behavior and this kind of rhetoric coming out of the Israeli government. And again, I think it behooves American politicians to recall what George W. Bush did 24 years ago. I mean, it was an American president who made Palestinian statehood a formal aim of the United Nations.
Let me just ask you then, just to round things up and focus on the here and the now. The Trump administration has been trying to secure a ceasefire. They've been pushing for Hamas to release the last remaining hostages. Do you see that happening, given also Hamas is under immense pressure now?
I don't think the United States has been honestly pushing for a ceasefire. It has walked back on its own proposals. We've seen Israeli Prime Minister Netanyahu sabotage one ceasefire deal after another over the last 2 years. And it's clear that for his domestic political calculations, he is basically unable to stop waging war because he has no political plan for the day after, not for Gaza, not even in Lebanon, where Israeli forces still strike daily inside South Lebanon. So I think that the fundamental problem here is that Netanyahu is escaping his political dilemmas and predicament at home by waging war. And at the same time, Hamas, I think at this stage, which is more than fighting for its survival, I don't think is a viable political force for the future anyway. But at the same time, it's clearly not going to assist by submitting to terms which, frankly, when they come from the U.S., keep changing. The goalposts keep shifting. But I think the really central problem here is that even if Hamas were to agree to surrender, to fully, I don't think that this Israeli government will stop there. It's already announced that it intends to move forward with annexing the West Bank. It's herding and expelling Palestinian communities from their homes across the West Bank already. 1,000 Palestinians have been killed in the West Bank in the last 2 years. And, the threat to Jordan and Egypt of all this is massive, and the peace treaties between Israel and these countries are at risk.
Yeah. Yezid Sayigh, thank you so much for joining us on the show, Senior Fellow at the Malcolm H. Kerr Carnegie Middle East Center. Thank you. And coming up, a new $100 million fund to support AI innovations launches in Abu Dhabi. We speak to the team behind it next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersetchi in Dubai. A $100 million global fund has launched in Abu Dhabi to help the next generation of AI innovations. It's a collaboration between data analytics company Presight and investment firm Shuruk, aimed at supporting high-impact ventures. Joining us now is Presight CEO Thomas Pramotedham. Really good to have you with us, and thank you for joining our show. You've just announced in the last hour that you're launching this new dedicated AI fund, a global AI innovation fund alongside Shuruk that aims to invest $100 million in the next generation of AI breakthroughs. So tell us a little bit more about the types of companies that you're looking to invest in.
I think first and foremost, good morning and great to be back on the show on a different topic other than hold an earnings call. Well, the launch of the fund is really to target AI companies that are looking for solutions that can be deployed to the ground itself. You know, we're in the macro environment of large venture capital and large investments going into infrastructure, but the focus on smaller solution companies that are not building LLMs, that are not building big language models to find actual marketplace that we can work on. This is where the fund is targeted. We're looking for companies in early stage with a real solution that can be deployed. The fund is unique, not in the sense of its value, but it's in the fact that you get capital, you get infrastructure with what we're building out in the UAE. You get the markets that G42 ecosystem and Presight is able to offer. So we're looking for companies that actually have a solution that wants to hit the road and give them access to the 11, 14 markets that we're operating in. On top of that, compute has always been a challenge for these young startups. And with this, together with the accelerator program that we launched and closed quite recently, this is what they're going to get. So the unique differentiator is not just in the $100 million to be invested, but the ecosystem that they will get to support for markets in the growth region.
Are there any particular technologies that you are excited about?
I think right now, post the stage of agentic AI, we're looking for specialized language models that really solve a defined problems. We're looking for companies that are doing well in the public sector, citizen engagement. We're looking for companies in the finance sector. Enhancing our energy, renewable energy, and sustainability programs is something that we're looking for. And you know, a big part of our program, we do smart cities across the growth region in this part of the world. We're looking for applied AI solutions that are ready to hit the road.
Yeah, that's so interesting. So you've got, your solutions in Gulf countries. You've also worked very closely with countries in the global South and Asia as well. Are there any particular geographies that you're looking at to invest in this new AI fund?
I think Central Asia has come up as one of the top priorities. You know, we started an office quite recently in Kazakhstan that oversees our Central Asia piece. I just returned from Azerbaijan, where Presight and the government of the Azerbaijani Ministry of Education and Ministry of Digital signed AI initiatives program. In that initiative, we're launching, we'll bring our startup community. One particular one is in education. We think this is the way we're going to repeat. So Presight has always been able to leverage our market presence, our partnerships with the government, as well as to bring innovative solutions. And now we're not just our own, but a collection of innovative companies across the world with the ability for them to become and fold it into Presight's portfolio in this Presight Shuruk venture fund that we're doing.
Yeah, so this was going to be my follow-up question. It's not just about, I guess, finding an investment opportunity, but also eventually the plan is to fold it into the broader portfolio that Presight has.
Absolutely. We've been growing the portfolio of companies. Last year, we invested in IQ, and you're familiar with that. And that opened up the energy sector. And we'll continue to build a group of portfolio companies that will continue to be accretive to what Presight is doing. But at the same time, we're able to charge multiple portfolio companies in its own path and leveraging this current AI launch and the AI era that we're in.
Yeah, I want to broaden it out and ask you sort of, a bigger picture question, because we spent a lot of time on this show talking about Nvidia today. There's some breaking news about Nvidia, their investment into OpenAI. Let me just ask you, in our part of the world, are we getting access? Is the Gulf getting access to the chips that are necessary to power the data centers and the models that are aligned with the vision of a company like Presight? Are you getting access to the chips that you need?
Yes, I think absolutely. I mean, if you look at the wider picture, NVIDIA's investment into OpenAI is something that is very exciting because you see the convergence of the different components of the ecosystem together. In the UAE, we launched Stargate UAE, which is a big partnership with NVIDIA, OpenAI, Oracle, and that is due to launch. There's 1 gigawatt of access that we're going to be available to us. We expect 200 megawatts to come online. So we are getting access to the chips. But more importantly, what you're going to see is a convergence of technology leaders in different parts of this value chain coming together and then really driving out this AI era. A big part of it, solutions and keeping, that's what Presight is investing in. We're delighted that NVIDIA and OpenAI is coming together very closely. They're close partners of ours. You see Microsoft being in the fold. So continuously, you will see infrastructure, you will see large language models, but more importantly, they must turn out to be applied AI solutions. And that's really where Presight is. And our fund is to look at where we can apply this solution to make a difference on a day-to-day basis.
Thomas, always a pleasure to chat to you, and thank you for joining our show today to talk us through the launch of your new fund. Thomas Pramotedham, CEO of Presight. Thank you. And coming up, the son of Saudi Arabian Prince Al-Walid bin Talal and a member of Sharjah's royal family by a London-based real estate developer. We'll bring you more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Arada Developments is investing $680 million to acquire a 75% stake in the London-based real estate developer Regal. Arada is co-owned by the son of Saudi Arabian Prince Al-Walid bin Talal and a member of Sharjah's royal family. For more, let's talk to Bloomberg's Middle East finance reporter Zainab Fatah. So, interesting, also like quite a significant stake in this British real estate developer. What's the thesis behind the investment?
It's really another facet of Dubai's boom kind of spilling over to the UAE. So this company, Arada, is basically a developer in Sharjah, which is the northern neighbor of Dubai. Sharjah saw huge demand as prices and rents soared in the city, and Sharjah became kind of a haven for a lot of people trying to flee the increasing cost. And that in itself created a boom that benefited Arada. A lot of developers in the UAE, whether in Abu Dhabi or Dubai or Sharjah, are kind of looking at ways to recycle some of this cash that they've built up. And going and investing in other markets means that they're able to cushion themselves against the market cycles. So when things slow down here, there is hopefully lower interest rates in the rest of the world. At the same time, they kind of put their cash to use, and they're not that way forced to oversupply the market here.
And why London? Why London specifically?
Because Arada also did an investment in Australia last year. They're basically, they have 200,500 homes that they're building in Australia, so they're looking elsewhere. But London is a place where they see an opportunity. Demand for homes have fell because of higher borrowing costs. Fewer than 4,000 homes were sold in the first half of this year, and the market looks extremely slow from their point of view. This won't stay forever, so they think this will change.
What are the types of properties that they'll be looking to get involved in London?
So Regal has around 10,000 units under construction. This is their pipeline. They expect to triple that by in the next 3 years, so you can see how much money they think this will help the company go ahead and complete this supply. They work on, residential, which is, partly luxury. They have also student accommodations, senior living communities, also co-working spaces and office space. So they're pretty well diversified. Mid to small developer. They're not one of the biggest ones in the UK.
Yeah. Zainab, thank you so much. So interesting. Bloomberg's Middle East finance reporter, Zainab Fatah, thank you very much. Well, we were talking yesterday about the strong run-up in equities, and once more we saw the S&P reach another record high, 28th record high for the year. Today, you want to watch out for Powell. He will be giving a speech. So remember, they cut interest rates last week. Perhaps today we'll get some further clues, signals about how the chair himself is thinking about the shape of the economy, the softness in the labor market. This as the new incoming Fed member, Stephen Myron, temporary member, but talked about the need to cut more aggressively. And remember, he was one of the lone data points that was calling for another 125 basis points worth of easing by the end of the year. So we could get some interesting comments out of policymakers later. This is your board. S&P futures marginally in the red. You've got European markets trading sideways, marginally to the green. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.